Hey, it's Michael Saul, also known as Tiny, and this video is Are We Going Lower? Plus 2 stocks to watch. This is for the week of September 26, 2016. Now, if you watched my video last week, I talked about the market potentially going lower. I did say I thought it would hang on until after the Fed. I didn't expect it to really take a dive before the Fed, but then after the Fed, I did talk about us having, in my opinion, a good chance of going lower. Now, I was pretty clear, and I watched the video again before I recorded this just to make sure. I didn't say we're going into a new bear market or we were going to get a huge, big correction, but I did think that we had the opportunity to get a pullback. Well, we didn't. Instead, we went higher. That's why you draw in the lines. Okay, we went higher after the Fed. Fed did nothing as expected. And we broke higher. We ran into the 20 EMA, which is this red moving average. Then we even got above that on Thursday. But on Friday, we started to pull back. So I have a couple of lines drawn in here, and I'm going to change these lines. I just want to show them for now. This line up here is not only a gap fill at around 218, it's also the 78.6% retracement of this swing down. So that's key resistance. And we didn't quite get there yet. Could we get there early in the week? Sure. We have the presidential debate coming up. So there is a lot of opportunity here for the market to pick up a little bit in volatility. We'll see. And that, of course, the pickup in volatility doesn't necessarily mean we go up. Usually a pickup in volatility correlates with us going lower, but it could just be more action, quote-unquote action, than volatility here. So if we can't get above this level here, which is around 218, it's a little bit, you know what, of course I have to look because there it is, 218.15 is that gap fill. If we can't get above that, we still have an opportunity to trade lower in a zigzag pattern. Okay, and for those of you who are Elliott Wave folks, I am a seat of the pants Elliott Wave guy. I am in nowhere near an expert in any way, shape, or form. I don't claim to be. I've tried to learn it for several years on and off, and I'm just not good at it. So I don't pretend I am or anything like that. But when I see a pattern, I tend to like to, or a count, I should say, I tend to like to see what's going on here. So this could all be, right, we could have 1 down, 2 up, right? The wave 2 is supposed to challenge the first move down or up, right, if wave 1 is up. And it looks like wave 2 is challenged back to wave 1. Then this could be 1 of 3, and then this could all subdivide. So, yeah, we could perhaps be going lower, and this could just be a fake out here. Now, again, I don't think we go into a bear market. I don't even think the pullback gets that far, but it's real easy to just sit here and go, well, the Fed, hey, we went higher off the Fed, so now we're just going to go higher here. Yeah, if you're the NASDAQ, okay. And the NASDAQ popped to the Qs didn't pop to a new all-time high, but they popped to a new multi-year high. The composite popped to a new all-time high, and they started to pull back. But you still have the Russell lagging a little bit here. You have the mid-caps, which had been leading. They're lagging. And, of course, the S&P 500. The Dow I don't really care about, but that's lagging also. So for this week, if the bulls can hold in here and turn it around and get above that 218.15, then okay, I could see us going out to new highs and continuing to trade higher. But if this holds in here and we start to trade lower, don't be completely surprised if we do wind up taking out these lows. Again, we have support right here from the top of this gap. So we have the top of the gap right here. We have the 200-day moving average. And then, of course, we have the lows for June. And I will reiterate, still wouldn't even be a 10% retracement if we got there. So it's not like, oh, my goodness, it's a crash. No, it's not. It wouldn't even be 10% from here. We're at 216. Okay, 10% would be 21.6. 198 doesn't bring us down there. Even off the highs, which we'll call 220, which they weren't. 10% is 22. That would bring us down to 198. That would only be 10%, and it wouldn't even be 10% because, this low is a little bit above 198, and we're quite at 220, blah, blah, blah. All right. My point of this is don't get too focused on one side here. Don't say the Fed is out of the way, so now we have to go higher. The NASDAQ hit a high, so we have to go higher. Yes, the NASDAQ does lead, but being up there by itself, the NASDAQ composite being at all-time highs by itself, that's not a red flag, but it's definitely something to pay attention to. Okay? Don't want to sound like an uber bear, but you have to give both sides of the coin the proper analysis. All right? 2 stocks to watch this week. The first one, and I did not do my due diligence on this, so I have to do it now with you on the video. The first one is Q2 Holdings, and this is a gorgeous, gorgeous coil here. Now, we are stuck right about, I'm not going to get the Fibonacci grid out because it doesn't matter. We're close enough to the middle here. So that puts us on a watch for either a push down or a push up out of here. However, the fact that we got the bounce off of this and that we're sitting above the 20 EMA, the 50-day moving average, it puts the lean for me to the upside. But in my opinion, you got to be, when you're coiled like this, you got to watch either way, okay, and not get biased here. You let the market get you in one way or the other. So that's Q2 Holdings. Now, what I have to do is I have to look the earnings date up. So let me do that. By the way, I own no Q2, and I will not be buying this. It's not really the huge volume stock, number one. And number two, I do not front run or pump and dump or any of that stuff. So you're getting it the same time that everybody else is getting it when I put it up on YouTube. Okay, Q2, QTWO reports November 3rd. Okay, that's what it says on Yahoo. It could be different. So I'm just using Yahoo as my guide here. Let me make sure. Right, okay, time not supplied on November 3rd. So yeah, it's a while, right? 5 weeks, whatever it is. So it should, with a capital break out from this one way or the other, but we have to wait and see. So this probably was the last earnings when it did this. And let's see what it can do here. But you do have targets up here into the 30s if it can get going on the downside. If it breaks, you got a chance for the 200-day moving average. So not directly in the middle, but close enough. All right, so the second stock. Okay, and the second stock is this little tiny stock you may or may not have heard of. Okay, I'm being facetious or sarcastic. I can't figure it out. Bank of America. So this is, looking at the financials, one of the reasons why I am not fully sold on more downside, because the financials, which had been lagging for a while, have finally decided to pick up the pace. And you see Bank of America here. I mean, you got to call it a bull flag because this was the impulsive move up from the 1460s or whatever this was here. It's just that overall it's in a range. I mean, it does have some issues at this gap that can't be ignored into the 16s. But, I mean, by the time it gets there, that's $1 something from it if it can move from here. All right, again, I'm not in the biggest rush to grab something without confirmation. You know, there's the pattern here, and if it can get going, okay, what I love about these types of patterns is if you enter, you know where you're wrong, and that's if it comes back in. So the stop can be pretty tight. And if you enter, you put an initial stop underneath the pattern, and then you trail it. You know, if it closes outside the pattern, you just trail it up the next day. So it's pretty simple. Doesn't mean it's easy to make money or anything like that. It's just pretty simple to manage. And that's what I like. Right? A lot of people, what's the stock that has the biggest potential to move? How much money am I going to make? But really, all that does is get you in trouble. What you want to look for is what is the best setup that I can manage here. So 2 stocks that, well, I mean, we'll talk about Q2 again real quick, but I mean, Bank of America looks higher if it gets confirmation. If it doesn't get confirmation, it's just beautiful artwork. And then Q2, I mean, I lean to the upside, but again, got to be able to go either way from here depending which way it breaks. But overall, I'm not so sure that the downside is over in the market. So let's see what happens. I know it's a little sloppy with these lines here. I mean, I could probably get rid of these if that will make it a little bit clearer here. And the Fibonacci grid I can even get rid of too, because you still have the gap fill here. So I mean, it's not, yeah, I erased the wrong line. That's all right. I could just do this, and I don't know why I'm going through all this with you, but okay. Yeah, so there's the small little zone right here. But again, I mean, if we're doing some Elliott wave and we're 1, 2, and then this is 3, and maybe even this is 4, I don't even know, or this is broken down, this is breaking 3 down, this is 1 of 3, this is 2 of 3, right? That could happen too, right? Because 3 can break down into 5 waves, and then 3 of 3 still to come. That could be a pretty nice size move. Again, I don't think we're going into a bear market, don't think we're going into a big correction. Just not going to stay biased on one side when we don't have all the evidence pointing in our favor. Have a great trading week. winningedgetrader@gmail.com if you got any questions for me. Have a great week.